Hey traders, welcome back to another video. My name is Akil Stokes. I am an investor, a Forex trader, and one of the co-founders over at tier1trading.com. Typically in these weekly YouTube videos, I take you on a stroll around the markets, showing you the best ideas that are on my radar for the week to come. But this week, we're gonna do something a little bit special, right? You see, we just wrapped up our Bridging the Gap online trading workshop. It was a 4-day workshop where we spent, almost 15 hours teaching some valuable lessons about the market and about how to treat trading as a business. And one of the lessons that I did on day 4 was talking about the most important concept that you need to understand if you want to be a technical trader. Now, this particular lesson got a massive amount of feedback. So what I wanted to do is I wanted to share it here on YouTube for you guys that may not have had a chance to attend the workshop. Speaking of which, if you haven't had a chance to attend it, we still have all of the recordings up until Monday, so you got to be quick. But if you head over to www.tier1trading.com/free, there should be a little thing that allows you to register for the event. Once you register, we will email you a link where you can watch all of the recordings from all 4 days of the workshop. But remember, these recordings are only going to be available until Monday, so make sure you carve out some time this weekend right away to take in all of this awesome content. If for some reason you're watching this video late and the Monday deadline has passed, you can still go to that website. We always offer some type of free webinar or workshop that you can take in. But trust me, the Bridging the Gap workshop is a must if you haven't seen it already. So this is going to be a rather long video, so pause the tape if you need to. Take out a notebook or load up your note-taking app on the internet, because we're going to talk a lot about technical analysis. And if for some reason this video goes over your head, maybe you're brand new to trading, brand new to technical analysis, don't get overwhelmed. This is actually a follow-up video on a lesson that I did on day 1, where we took a much slower approach in walking the traders through my step-by-step approach of how to read the markets, how to identify trend, and really how to determine and make predictions on what price is likely to do next. So I certainly advise watching that video as well, if not even watching it before this one. Lastly, do me a favor, hit that subscribe button here on YouTube. We just passed 45,000 subscribers on my personal page, which is awesome. So hit that subscribe button, hit the notification bell. That way you know each and every time I put out a video. And thank you in advance for doing so. All right, hope you guys enjoy. So what I want to do today is I want to take you just through a quick stroll of the market. I don't want to get too in depth with a lot of things, but I want to show you just a handful of opportunities that I'm looking at. I have about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 pairs on my radar. So we're going to go rather quickly. But what I want you to get out of this process is I want you to just see how we can look at different pairs. We can look at different markets. We're going to look at some commodities. We're going to look at some stocks. And I want you to focus. Here's the game I want you to play. I want you to see if you can focus on what we talked about in day 1 and day 2 of the basics of just reading trend, reading structure, and being able to make predictions, right? Does that sound like a plan? I'm going to reboot my screen real quick. I don't want you caring about trade entry or anything like that, just the prediction part of the process. Because again, what did we talk about this morning? What's the most important part of being a technical analyst? Is it being able to find the trade entry? That magical entry, that's the moneymaker right there. Let me teach you my secret entry technique. All right, that's how you sell courses. No, being able to predict what price action is likely to do. So we're going to start here on the Eurodollar for you guys that are tracking with me. And we have a few things happening here. This was one of the patterns we looked at earlier in the week. If you guys remember, we also had a Gartley on this. Can you guys see it? It's not the one that didn't complete, but it was the one to the bottom side, X to A to B, B to C, C to D, right down there. Beautiful Gartley pattern completion, a deep one, which means the risk reward is very small, right? If you look at this little risk reward deal, very, very small risk, good amount of reward. But bigger picture, we have something else setting up here. We have price action currently trading at what? What are we currently trading at price action? We actually have two things setting up. This is going to be a pretty cool example. Identify, where is price action at? Would you guys say that we're trading at a previous level of structure? Yeah. So if you look at this nice red box, which I meant to take away because it cheats and gives you the answer. But we're trading at a previous level of structure. If we look to the left, we see more levels of structure, correct? So this is what I call a decision point. I'm actually going to move this up a little bit to my extremes. This is what I call a decision point. And I call it a decision point because at this point, I'm not buying it. I'm not selling it. What do you think I'm doing? I am waiting. Mike says he was looking at this morning. Yep, we're going to be on the same page, Mike. I'm waiting for price action to tell me what it wants to do. If we get rejected, right? If the buyers get rejected, so the upward move, let's put it that way. If the upward move gets rejected at this level, then I can start looking for short opportunities, right? If then. If we violate this level, then what can I start looking for? Long opportunities, right? So again, this is the process that we go through. We're very computer-like, right? Following a flow chart. And what you do as a trader, if you can see this as, if you're someone that's allowed to trade both ways, you start setting up how you're going to handle each situation, right? So you have on your little notepad out, and you're like, okay, if we get a rejection, here's how I can take advantage of a bearish opportunity. Blah, 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 boom. If we get a violation to the upside, here's how I can take advantage of a buying opportunity. Blah, 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 boom. And now, right, you've pre-planned how you want to attack the market. Again, because you have a trading plan, you know exactly what you need, what needs to happen in order for you to take the trade. You're just waiting. And you're waiting well in advance of this trade actually happening. Now, in most cases, you have a predetermined bias, right? I have no interest in getting short at this level. Right? I have no interest in getting short. I can look at this level. I can see there's not enough target projection or profit projection for it to be a trade that I can take advantage of. So I'm only waiting for a break to the upside, right? And to complement this, we have two other things happening. Mike mentioned this earlier, but we have another pattern, a simple pattern formation, or a classic pattern formation, I should say, perhaps not simple, called a head and shoulders pattern, where the market has essentially made a move like this. We've consolidated on the left. We rallied deeper. We came back up to equally retest the previous highs. We've consolidated on the right. And now we're at this decision point, right? Does this up here look familiar to this up here or down here? This is the hourly time frame. Yep. This is called a head and shoulders bottom. And typically this is a sign of a reversal. It's an exhaustion and reversal of the trend. So this is another clue that price action, and I like the term head and shoulders bottom. I'm not going to get too much over terminology, but for me, inverted or inverse is a little bit different. I'm actually going to show you an inverse a little bit later, because inverse for me is a different pattern. So I like the term head and shoulders bottom, but again, it doesn't really matter what you use as long as you know what you're talking about. But this is a head and shoulders bottom pattern, right? And we know that this is a sign for a potential bullish reversal if we can violate what's called the neckline, and that neckline happens to be the same level of structure that we drew out. Now, here's the important part. How many of you guys got a little weird when I started talking about head and shoulders bottom? How many of you guys were kind of like, uh-oh. Be honest. I'm not going to judge you publicly. Here's the thing. I don't want to say it doesn't matter, because I think everything matters to a degree. Again, we're detectives putting the clues together in the market. But let's go back to the original prediction we talked about before we talked about this head and shoulders bottom, right? What did we talk about? We talked about violating this structure, this yellow line, correct? Was that kind of the main thing on our radar? If we violate that structure, then we can look for an upward move. For you guys that are head and shoulders traders, what has to happen in order for us to validate a head and shoulders pattern? We must break the neckline, correct? the neckline is this same level of structure, right? So do you see how it's the same thing? What matters most is structure. It's the same concept. A lot of people like to confuse it and they use all these big words. Oh, this and that and that. It all comes down to structure. And at the end of the day, whether you're trading this as a head and shoulders bottom, whether you're just a structured trader, whether you're trading this as a horizontal channel, all that matters is what? Or what matters most, I should say, is what? Because as Jason mentioned yesterday, it's never just one thing. But what matters most is the violation of this level of structure. And this is why the fundamentals are so important. I shared with you a story on Monday of how I bounced from system to system to system, right? And all of it failed because the system failed. And then when I actually learned how to trade from the bottom up, it all started to make sense. Because this is all the foundational stuff. If you learn how to read a price chart, if you learn the power of structure, support, and resistance, you can do anything. You can do anything. You can just do it in a more detailed way. I didn't share this story, but I used to when I used to play basketball, I used to want to do everything that I saw people on TV do, like crossovers and spin moves between the legs. But there's a problem. I didn't know how to dribble with my left hand. And I would try to do it in practice, and I get yelled at by the coach because I turned the ball over. And then he sat me down and said, you got to be able to dribble with your left before you can do all this fancy stuff. So I went outside for hours a day. I just dribbled with my left hand. Boom, 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 boom. And then once I got good and confident with my left hand, then I was able to add all the fancy moves, and I was a lot better at it because I worked on those foundational elements. So within this level, we have something else. Now, this is going to be your inverted head and shoulders, right? Inside this small level of consolidation, so on the right shoulder of this head and shoulders, we actually have another pattern. And this is going to be your inverted head and shoulders. And what an inverted head and shoulders is basically it's a head and shoulders bottom after a bullish move. Now, again, don't get too confused over that. Doesn't make a difference. The key point is this is also a sign, this classic pattern formation is also a sign for a bullish breakout or a bullish reversal. So you've got three signs in the market right now. You've got general structure analysis. You've got the classic head and shoulders bottom pattern. And if you got the inverted head and shoulders here, check 1 for bullish, check 2 for bullish, check 3 for bullish. Now, again, where traders get into trouble at is this. They see all these check marks and all this stuff is screaming bullish. And what do? They buy it right away. Should we buy it right away, guys? Should we buy it right away? No. Wait. Wait for confirmation. Wait for confirmation. And in the meantime, while you're waiting for confirmation, you can start playing out the rest of your plan, okay? If I'm going to involve myself in this trade, what do I need to happen, right? Where is price action likely to go? So you look on your price chart, you ID some levels of where price can go to. About a 111 even handle looks good, or 111.10s look good, and start measuring out your risk reward. And then you can start determining right after you've taken into account entry stops and targets, whether this is a trade that's going to meet your plan or not. And if it does, then you wait and hopefully you get what you need to follow through. If it doesn't, you move on to the next pair as if we're doing that, as what we're going to do now. Now, next pair I want to take a look at, and again, we're going to roll through these quick. I apologize, but I don't want to spend hours doing chart analysis. New Zealand dollar on the 60-minute chart, right? Similar situation. This one will be quick since we kind of went over the same thing. This is one where I'd come in the beginning of the day. I see that price action. I identify that price action is trading where? Have we broken structure? Have we violated structure? Are we at structure? Here's bigger picture New Zealand. Again, kind of a sideways shuffle here. We are at structure. So again, same type of decision point. And I swear I got to get rid of these boxes because it's cheating. It is cheating. Whatever. It's going to come back up whenever I load up the next screen anyway. Just ignore the red and green boxes. Don't let them give you a bias because I want you guys looking for the answer. Right? So same thing. Decision point right here. And so far, the market is going into a little bit of indecision, right? These little candles are called doji candles. I believe Jason taught you about this on Tuesday, right? Indecision. Bounces a little bit up, bounces a little bit down, ends in the middle. Bounces a little bit up, bounces a little bit down, ends in the middle. This is your decision point as a trader. If you're someone that's looking to get short, a very aggressive entry at this level would be a lower low, lower close, right? If we can get a candle that breaks and closes below the previous candle, very similar to what Jason talked about on Tuesday, that could be confirmation for a sell signal. And then, of course, you got to ask yourself, if price action is going to go short, where are we likely to go short to? Level that I would ID, because I'm a very conservative trader, is our next inside level of structure right here. Same thing, if we end up violating this level to the upside, zoom out a little bit and you ask yourself, where can we go to the upside? Well, we can probably retest this level of consolidation right here, starting at about 64.50s, anywhere up to 64.66s. And of course, we can use the tools that we learned this week, maybe AB equals CD pattern, to kind of confirm where in that level we should shoot for. Add some Fibonacci confluence to that. You got a 127 at 64.50s. 64.50s is a psychological number. You have an AB equals CD completion at 64.50s. Not a bad level to shoot for targets at. So right now we've done what? Bullish analysis, bearish analysis. This all goes in our daily journal of what we're looking for. And then what do? Do we buy or sell right away? We wait, right? You go through the rest of your process, entries, stops, and targets, because those are important. Sometimes you can have a great entry, but you may have an inverse risk reward. If that happens, you can't take the trade. So you go through the rest of the process. You may even want to rehearse it in your mind, right? There's been studies done. Some of the best athletes in the world, especially Olympians, rehearsing something in your mind, right? Visualization is just as important as actually kind of physically going through the course. Did you guys know that? I forgot what Olympics it was done on, but it was done with Olympic downhill skiers, and they had 3 test groups. They had the group that actually practiced the course. I think it was like a slalom or something like that. Then they had a group that never practiced at all, but they just visualized it, ran through it in their mind over and over again. And then they had a group that did both. And surprisingly enough, the group that just visualized it actually did better than the group that just went down and tested the course. So there's nothing wrong with going through your process and drawing on your chart and saying, okay, how would I handle this short entry, right? Do with me, right? Have your trading plan on the back of your wall. Okay, if I get lower low, lower close, then I enter here, blah, blah, blah. Okay, stops go, okay, ATR, 2 times ATR. Okay, that goes here. And then targets go right there. Okay, boom. Right? Do it over and over and over again. That way you're confident in your actions. And you're way confident before the trade. All right, let's go to the next chart. Again, we're going to blow through these because I want to give you guys different examples of different trades. Here's one that you can actually trade at market. Not in my portfolio, but it's a good 26.18 opportunity on Euro New Zealand. 60-minute. I don't know if Gabby trades this pair, but she would like it. 26.18 opportunity. Essentially, a 26.18 opportunity is a retest of a double bottom, right? We talked about double bottoms on Monday. Price action has come down, giving us a nice symmetrical double bottom. We have violated the highs, the peak of that double bottom formation. We've come back down, right? And we have a nice little 3-bar reversal. 3-bar reversal is essentially this, right? It's a high Momo candle, high momentum, this big red candle right here. We teach a lot about momentum and strength of candlesticks. Followed by an indecision, followed by a higher high, higher close. So think about it like this. Think about this big red candle as being a truck, right? How many red days have we had in a row, or red candles in a row? 1, 2, 3, 4, 5, 6, 7. Little pause there. 8. 8 out of 9 candles have been bearish, right? Truck going fast. What does this candlestick tell us down here? Indecision, right? Little wick to the upside, little wick to the downside, close in the middle, indecision, right? So imagine that truck hitting something, hitting some type of wall, some type of opposing force, and it just stops. Now, is that enough to give us a sign of a potential reversal? No, right? Maybe it stalls a little bit and breaks through. But this is why we, say it with me, starts with a W, ends with a T. Hold up, wait a minute. Rest in peace to Nate Dogg. We follow that up with a higher high, higher close candle, giving us confirmation. Now, what I love about this candle, this is what I love about it. Some of you got tier 1 members, what do I love about this candle? You guys know me. You know me better than my wife. Don't tell my wife that. What do I love about this candle? What do I love about it? Who loves orange soda? Look at the wick, right? One of the courses we have is called the Foundation course. It was a weird course that I created, really taking a different look at price action, looking at each candlestick as being like a story. Mainly because that's how I feel comfortable analyzing things. That's how it makes sense for me. And I thought I was the only one. And then when we released the course, we found out that a lot of people think like that. And it's something that Jason, Grayson, and myself use in all of our analysis. And again, go back to Tuesday's lesson, right? A candle by candle basis. This candle tells us a story. What does this wick to the downside mean? Let's see how much you were paying attention this week. Because Greystone wrote this out for you. Let's see if you were actually watching him and listening and paying attention. What does that wick to the downside mean? Strong rejection. Yep, it means at some point, price went down here below the previous low. Selling pressure, bears, oh my gosh. But then what happened? This is why we wait for the candlestick at the end. This is another important point. There's so many important points that we're not going to get to today. Jason, you ever feel like when you're done these presentations, you want to say so much more and you just can't? That's the one thing I hate about these workshops. There's so much to learn, and we can only like the tip of the iceberg. And it's like, man, I wish I would have said that. But we pushed lower. But when it was all said and done, at the end of the hour, when this candle closed, who won the battle? The buyers, because they pushed it up. Not only did they recover from getting smacked in the face to start the session, but they created a higher high, higher close, an engulfing candle, showing us a sign of bullish strength. This is one of my favorite entry signals. And as Tony mentioned, right, there were probably some rookie traders, maybe some of you guys, that saw this little doji and you were too aggressive because you didn't do what? Starts with a W, ends with a T, type it in. You didn't wait, and you wanted to be cute, and you want to enter right here and say, I'm going to get my stop loss 10 pips below the low. Because every new trader puts their stop loss 10 pips below the low, right? Because that's a stupid thing that we do, because 10 is an easy number, right? Unfortunately, right, professional traders and more importantly institutional traders, they know that. So you know what they need to do? They need to probe and take your little stop loss out to provide them with liquidity to get their buying position on, and then they leave you in the dust, and then you're stopped out. Ever been there? Me? Yeah. What's worse is, and not to get too far in this, right? Then this thing starts going up higher and higher and higher. It gets to right here. You're in so much pain because you stopped out, and you're like, I'm gonna buy. I'm gonna get that money back right here. And of course, you decide to buy at the very end of the move, and guess what happens? Does the exact opposite. Market comes up here, you get that candle that shoots up here, you're all excited, and then it crashes down, and you're like, God darn it. But very good setup for anyone that's a 2618 trader. Very decent setup here. All right, let's go to the next one. Spending too much time on this stuff. Let's go to quickly New Zealand yen. It's the same thing, so we're not going to spend too much time on it. But New Zealand yen, same type of setup we're seeing on the hourly. We're sticking with the hourlies today. Prices at previous structure. VS1 levels have cheated for you because they showed you it's there. What are we seeing at this level? Who was paying attention the last couple of minutes? Not only have we had a 3-bar reversal, right? High momentum candle, indecision candle, engulfing candle, but price made one more test at the highs, teasing anyone or making anyone that had their stop loss right above this level pay the ultimate price. And then so far, again, we got half an hour left, so you never know what will happen. So far, we're seeing a bearish reaction. One of the things I want to get across, guys, is I hope you understand, like, would it have made a difference if I told you what pair we're looking at? Too many people get caught up over pair, time frame. What's the best pair to trade? What's the best time frame? You know how to read a price chart. It doesn't matter. You can ask Mike that. Mike works mainly in the stock market. And we were talking to him the other day about how he wants to venture into Forex. Right? He may even be thinking about doing something really, really cool that you guys can follow. But he's worked in other markets before, and he basically said to us, yeah, it's all the same. It's all the same. Obviously each market has its own personality, right? Stock market's a little bit different than the Forex market. Each pair has its own personality. One of the best quotes I ever heard Jason Greystone say is treat your pairs like your employees, right? Any of you guys business owners out there? Anybody have employees that work for them? I probably should say any of you guys good business owners out there? Right? Let me ask you this. Or even coaches. I get this from a coach. Do you treat all your employees the same? Do you treat them like numbers? Hey, number 3, come here. No. Each person is different. Each person is motivated a little bit differently. Right? Some people need a little hard tug to get them motivated. Some people need a little coddling to get them motivated. Some people need more positive reinforcement. Some people need a challenge, right? Everyone's different. And you're going to get the most out of your employees if you know how to treat each of them in a very specific way. And the markets are the same way, right? Overall, the principles are exactly the same, but there are slight differences. There are slight differences in the pound yen versus the dollar Canada. Well, kids are different. Kids are different. Jason, I treat my family like that. Oi, number 3, here, come here. I do that when I went from 1 kid to 2 kid, and you know, I always I kept forgetting the names. I'm like, hey, you, here, come on, get over here. Which one? You, whatever your name is. You should have just named them the same thing. That'd be easy. Why didn't I think about that? Tony said number 3 is the wife. I've never made that mistake with the wife. Hey, you. No, it's always hey, love of my life. When you can't remember the name. But yeah. All right, so let's go to another pair. New Zealand, Canada. Rolling through these things quick today, guys. But again, I don't want to spend a lot of time on the charts because you guys know I'm nerdy. I can dig into these, right? What are we seeing here? Bigger picture. I mean, I'm missing some data, I think. So I need to reload this, but let's hop up to a 240 real quick. 240M. Stupid ninja update. NinjaTrader recently had this update where you gotta type in M now after the deal, and I've been accustomed to not typing M for like 10 years, right? So it's annoying. I'm just gonna switch over to TradingView real quick to give us a better view of this. But New Zealand, Canada. All right, identify. This one's a little bit different. Identify. What are we seeing here on the price chart? Walk me through this, guys. Maurice says breaking consolidation. Peter says bullish trend. I like trading too. I like TradingView as well. I put TradingView as a very, very, very close second to NinjaTrader. I am biased to NinjaTrader because that's what I actually execute my trades from. And again, I've used it for like 13 years, so I know it like the back of my hand. What the heck is that? But TradingView, it's If it's 1A and 1B, it's 1A and 1B. It's very close. I actually had the benefit. I was on the beta testing team for TradingView. So when TradingView was first, before it was even invented, I actually got to test it. It was funny because at the time, right, we were thinking about starting a prop firm. And we were developing our own kind of, we're developing our own charting system, right? Like a white label charting system. And that way all of our traders can trade off that chart system. We know exactly what you guys are trading. That way you don't recklessly blow our money. And we were testing it out and we were all excited because, you always get excited when you make up your new stuff. Right? And then we got this letter from TradingView. And it was like, hey, we're on this new web-based thing. Do you guys mind testing it out for like a month and let me know what you think? And I remember I was like, yeah, sure. I like new stuff. I was honored to be able to test something. Like I was still a nobody at the time. Right? And I tested it out. I remember I shot a message back to my trading mentor, my business partner, Jason Stapleton. And I was like, man, we should just ditch whatever we're working on. Because this thing's great. And what I love is that they've adjusted over the time. They listen. I've sent them many, not complaints. What's another word for complaint? Many comments, recommendations over the years, feedback. Yeah. And they switch it right away. So I absolutely love TradingView. I absolutely love it. I love the TradingView charts. I hate everything else about it. Yeah, they have some wicked smart coders. Yeah. Russians. I hate everything else about it, but the charts are great. I hate the community. I used to love the community, but like many communities, many online open communities, I should say, it eventually gets out of hand. But it is a brilliant website. Yeah, so I love it, and it's the only problem I used to have with it. It was a little bit floaty in analysis. They've even fixed that. So the only reason it's 1B for me is because again, I've been with NinjaTrader since the beginning. And I actually use NinjaTrader to execute my trades. So it's my normal platform. Plus, we have our cool software coded for NinjaTrader and not TradingView. So that gives it a little bit of an edge as well. But aside from that, it'd be neck and neck. TradingView should pay me money for plugging them like that. But they won't. So anyway, so you guys are right. We have price action rallying up. We have consolidation. Now, in the past, we've talked about trades being or price action being at a level where we're at this decision point. What will the market do as it retests previous structure? Well, guess what? We violated previous structure already, right? So we have a higher high, higher close, right? We identify a higher high, higher close. This allows us to make the prediction that market is or price is likely to do what? What versus what? Oliver says, can you teach a little bit on price action patterns? Not today. Not today. Yeah. We're more likely to continue higher versus lower, right? So we have our bias. And this is the only thing I want you guys caring about. I don't want you caring about price action patterns and this and that. I know I'm sneaking a few of them in there because I'm a trading nerd and it pops out to me. But just think about the prediction, right? Because if you are accurate in your prediction, 75% of the battle is done. Trust me on that. So you predict that price is likely to go higher. So now your bias is only how can I get higher? And what's a very simple way to look for a move higher? We know that when, or maybe we don't know that, but you're going to know now, right? After previous structure resistance is broken, it often turns to or should be looked at as potential support, right? So the same level that was important before doesn't cease to exist. It's still important. And you look for price action to pull back to it, right? A very strong trend will pull back very slightly. A weaker trend may pull back deeper. If it does pull back past a certain level, it's usually a negative sign. Wait for the pullback and look for your next opportunity to trade up. If it does not pull back, then you just don't have a chance to enter the trade. Unless you can be a breakout trader. You can be aggressive and put like a buy stop over here. But that has to be a strategy in its own right. But if you were a pullback trader, I mean, if you are someone that needs price action to pull back into previous structure support and it does not happen, then you just don't have a trade. And then you do this, you hit this little right button on your mouse, go down to remove all drawing tools, and you start over. You look for the next opportunity. Or you don't look for the next opportunity, you start with a W, ends with a T. Maybe an H in there if you say it how I say it. You wait. Family Guy ruined that for me. Whipped. Cool Whip. Brian, could you pass me some Cool Whip? Why do you say it like that? I do that all the time. You know how some people play the meow game? You ever see that? Where it's like, hey, Darren, what are you doing right meow? Right? You play the meow game. Instead of saying now, you say meow and see who can catch you. I do it with my W's. It's funny because I do it in like very serious, I do it in very serious like meetings where I probably shouldn't, but I just don't care at this point. So we'll have like, we had a board meeting about a month ago and I was doing it there where we were talking about some fundraising things. I was like, guys, I think we should wait till Thanksgiving. And like everyone was like, you could tell people were catching it, but they weren't sure. So no one said anything. It was so great because meetings are boring. I hate meetings. If you're ever a part of if you ever get a chance to look at one of our tier 1 meetings, it's always ruined by some type of ridiculousness halfway through. The other day, what was it you put in there, Jason? It was the Area 51 runner that just like, it was a GIF, right? I say GIF, not GIF, because GIF is peanut butter. And we're talking about, I think we're planning this event. We're having a very serious conversation. And then I don't know how we got on Area 51, probably because none of us can be serious for more than like 15 minutes at a time. And it was this runner GIF. And like, if you guys know a GIF, it's like a really short clip that just rewinds. And we're sitting there like watching it for like 10 minutes, waiting for like, where is he going to get to? And then we realized he was never going to get anywhere. It was the most ridiculous thing ever. But it was a very nice pattern interrupt, and we ended up getting a lot accomplished afterwards. But it's just life is fun, man. Have fun with it. Don't be so serious. But yeah, there we go. The smartest traders in the world are sitting there watching a GIF just go back and forth, thinking something different will happen if we just keep watching it. Not the case. All right, Pound Canada, right? This is a trade we looked at on Monday. You guys remember this? Ascending triangle. Ascending triangle from Monday. Break to the upside. This was probably on a higher time frame and make look more familiar. Let's do this. Oh, let's not delete that. Here we go. You guys remember this bad boy? So this is the same situation as what we just saw on kind of New Zealand, Canada. Obviously a different pattern formation. Ascending triangle versus just kind of a sideways consolidation. But the basics are the same, right? What did we look for? A violation of structure highs, break and close above. What did we look for after that? A pullback in the previous structure resistance, which should now look at support. What happened after that? Boom, explosion. Different setup, ascending triangle versus sideways consolidation versus neckline of head and shoulders. Same concepts, right? Do you guys get the point? This is why structure is the centerpiece of my trading philosophy. It gives me that initial prediction, and then within that prediction, I can do all the bells and whistles. Right? I can do head and shoulders tops, head and shoulders bottom, advanced pattern formations, right? High and tight flags, ascending triangles, descending triangles, rising and falling flags and wedges. But it all starts with structure. Because that's the main thing that I'm basing my prediction off of. So if you take the time to learn structure, learn how a price chart works and moves, and how to make the right prediction, now it's just adding the icing on the cake. But on a smaller level here, you can see that we also had a little bit of consolidation, probably the same type of pattern here. We just broke to the high side. So even if we went down to a lower time frame, let's say an hourly, right? You just reset the process, right? Same exact thing on a smaller level. Ascending triangle, smaller one. A new higher high, higher close. If you're a trader, what must you wait for in this situation? The real icing on the cake is money management. That's where you start seeing the big moves. But what do you wait for? Wait for. It's the same exact setup we just saw in the higher time frame, guys. Come on, you should know. Retest, yeah. Retest the structure. Look to buy. We can still trade it up, right? There's still room to our ultimate target. Our ultimate target on the higher time frame was 1 at this 127 extension, I believe. Let me just zoom out a little bit more. Should be at the bottom of our daily consolidation. Sorry for the bouncing around. Yep, this 127 was the first stop in place, and then the second stop in place was the retest of our ultimate highs here. So there's still meat on the bone here. All right, let's do, here's another one. Let's go to oil. Show you guys a different market. Oil, very similar to the euro dollar. We'll start with the basics. What is price action doing here? I'm almost done, I promise you. I didn't want to make this too long, but we're on a roll. Where is price action at? Previous structure, right? Decision point, right? If we hold this level, we could have a double top. You can look for a shorting opportunity. If we violate this level, we can look for a push higher to our next level of consolidation. We also have a head and shoulders bottom. Again, I want to stay away from the inverted head and shoulders. This is a personal preference of mine. Head and shoulders bottom. Very similar to euro dollar, right? Actually have a very nice little double bottom down here. Were we looking at this? We were not. Nope. Very nice double bottom down here, but this is one that came in the middle of no man's land, so I don't think it would have been a takeable one. I definitely wouldn't have taken it. Anyway, Philadelphia Public School education, they don't teach us anything. Right shoulder right here. Now this one's a little bit different. You're gonna have a slanted. If you, there's two ways to do necklines. You do a horizontal one or a slanted one, but same concept, right? We violate the neckline, we're most likely to push higher. Different market. We're on commodities now. Same technical analysis, right? Here's another one. Let's go over to gold. I like gold. That's silver. Gold. Gold's a little bit different, right? Gold's in consolidation, correct? Did you guys say that we're consolidating? We might have just violated it. We came to a touch, yeah. What do we look for in consolidation? Showed you guys a few examples of this yesterday. We're going fast because I'm trying to get through all these. Advanced pattern formation. X to A to B. Check this C leg. If it violates the A, it's invalid. It looks like it just holds it. Very deep Gartley pattern right there. Excuse me. Frog in the throat. Let's go to a stock we looked at months ago. American Tower Corp. This is one I told you guys a story about my my best friend, best man at my wedding. He's the one that introduced me into trading. I don't think I told it here, but he was a trader that was more of a systems trader. The problem was that he needed a very high win percentage. He was the one that would get a system from 50% to 60% and then ditch it and then go because he wanted to get 70% and then ditch it and wanted to get 80%. Did I tell you guys that story? And he never actually traded because he was hunting for perfection. Okay. So that was him. But he does a lot of investments now, right? He's gotten out of the Forex market, does longer term investments. And he typically bounces ideas off of me, right? He says, hey, what do you think about this? Because he knows I do this for a living. And, not that I'm sure he takes my advice, but he just wants a second opinion on it. And this is American Tower Corp. They do like cell phone towers and whatnot. And this is one we looked at a while ago. I'm trying to figure out where we had our triangle pattern. In the summer. Right around here. And we're looking for a bullish breakout. And we got our nice bullish breakout. Now, price action is coming back to do what? What? In the basic concept, we are pulling back, right? Now, if you're someone that values a stock and we pull back to a cheaper price, what should you be looking to do? Buy, right? So obviously you can just buy, right? If you're someone that values this in the long term, you can just buy on a consistent basis. If you're someone that is using technical analysis in the stock market, so you're saying, hey, I want to have a fundamental bias for why I want to purchase this stock. But I want to find technical reasons for why and where I should buy it. What do you see here that could give you that technical reason? If we were to do some technical analysis, there are two things down here. Let's see how good your eyes are. Two things that have happened down at this level. Name one. I'm going to copy and paste. That's a nice message. 4 days. Good job. I mean to copy and paste all the nice things you guys say about us. So I appreciate it. Okay, well, one thing. Well, yeah, and we can bring in an EMA. What do you want, a 200? Oh, EMO. You want a 200? We could bring in a 200. One. There we go. One, okay, so we have the bounce off the EMA, which happens to come right off structure. Another thing is, right? Remember this AB equals CD pattern that failed me so many times in the past? 1-to-1 measure move. I'm sure there's Fibonacci confluence down there. You can make the case for, this is going to be pretty cool. I can tell you this right now. This is a trick I usually do in the lower time frames. But we're going to see a 127 and 1618 confluence down here. Watch this. For you guys that see me trading the range bars, I love this. Just because I used to be a really big fib nerd. 127 should have a 1618. If I'm wrong, I'm going to look like an idiot, but I don't think I'm wrong because my eyes are so great. Oh, baby, look at that. 1618, 127, right down in the zone. We also have, no one saw it yet. Come on. Gartley pattern. Is this the Forex market? Is this a commodity? Technical analysis is technical analysis. I can cover up the symbol, the ticker, in the left side of your chart, and it doesn't make a difference. There is also a bear cipher. Yeah, very good eye. Good job, good eye, Gabriel. So let's do one more, and then we'll take a break. But again, this is why I'm a technical nerd, man. Because it works everywhere, even if you're using it slightly differently, right? Again, I would use it different in the stock market, if from an investor standpoint, not an investor standpoint, but from a longer term trader standpoint. I would only use it as confirmation of something that I already have a fundamental bias on, but it's still powerful. Now, Dow Jones, right? Let's take a look at the weekly. So if you guys follow along, let's bounce up to the weekly time frame. All right. What do you notice here on the weekly? Let's go through that IPDE process on the weekly time frame. On the weekly, what do you notice? Sorry, I'm an idiot. Does it happen for news to disrupt advanced pattern formations? News can disrupt or not disrupt anything. Doesn't matter if it's advanced pattern formation. You get a big news release, it can disrupt the simple pattern formation. It can disrupt no pattern formation. It can have zero effect on the market. Yeah. So walk through the process. Identify higher high, higher close, right? 100 out of 100 traders must agree. You cannot not agree. Higher high, higher close above structure, okay? Predict. Price action likely to go higher or lower. Bigger picture. Higher, right? Boom, you set up your bias for the market. You know exactly what you, no question mark. No. Why is there a question mark, Chris? Why does it go higher? No, well, you tell me. What do you think? I don't care if you're right or wrong. Here's my coaching philosophy. I don't really care if you're right or wrong. Be confident. If you're wrong, be confidently wrong. If you're here like lower, wrong. Okay. But be confident in everything you say. I would much rather take a confident wrong answer than an unconfident right answer. So let's try it again. Would we like you to go higher or lower after we identify a higher high, higher close? And I know some of you are new, so I understand it's still kind of confusion. I don't care, but I want a confident answer. Higher. And why is it higher? Because that's what the rules say. That's what the rules say. If this, then that. If this, then that. If this, then that. Right? So, now that we know we're likely to continue higher, right? Your I, your P, you have a general idea, a confirmation bias of what direction you want to be in. Now it's simple. Now you go through your trading plan. You ask yourself, okay, well, how can I get involved in a higher move? And there are different ways to do that. Again, one of my favorite ways is a pullback trade. Just a personal preference of mine. So you can do it on a weekly, you can go down to a lower time frame, go down to a daily, right? You can identify your previous level of structure resistance, right? Which was broken. And you can say, once this level of resistance is broken, it should now act as support. And this is the first place you're looking for price to pull back to in order for your trading opportunity. And then, once price action gets there, what do? Starts with a W, ends with a T. We wait. Wait for your reason for entry. If you get your reason for entry, you take the trade. If you don't get it. You move on to the next pair. All right? So I just took you through about, 10 Forex pairs or 10 pairs, commodities and indices. I hope you guys understand that it's did anything change with the approach to the market? How long would that pullback take? Who knows? I don't know. It may never pull back, to be honest with you. It may go straight up forever. I don't know. And more importantly, I don't care how long it takes. Do you know why I don't care how long it takes for a pullback to happen? Because I'm already prepared. I know exactly where I need price action to come to. I know exactly what I need to look for when price action gets to that level. So my only job is to what? Wait. Patience pays, literally. It literally pays. Yeah, the market will do what it wants whenever it wants. And very rarely does it give you good opportunities. Our job is to sit back, and when it gives us one of those opportunities, hop on for a little bit of the ride. That's it. So, again, the goal of that was to show you that no matter what you're using, I tried to show different techniques from pattern formations, advanced pattern formations, the classic pattern formations, simple pattern formations, to show you that at the end of the day, it's all about the foundational elements. Reading a price chart, identifying structure. If you can do that, you're going to be able to create your bias in the market. And that's the most important part of trading. The entries and how you get involved, right? That comes later. Because I tell you what, an entry technique is worthless if you're predicting the market to go the wrong way. You could have the best entry technique in the world. Ooh, 3-bar reversal. But if you're consistently wrong in which way you think the market's going to go, that 3-bar reversal is just going to get you into losing trades. So we can't give it that much power. It's important, don't get me wrong. It's a rules-based way to get into the trade. We need it. But what's more important is being able to make that prediction. All right. Information overload, I know. So let's take 10 minutes? 5 minutes? Let's take a 5-minute break. So I know that was a rather long video, but I hope you guys enjoyed it. And most importantly, I hope you took the core concepts from the video. It's not about the trading opportunities that are at hand. More so, it's about the technique and the process of doing analysis, and really the fact that no matter what type of trader you want to be, those foundational elements of technical analysis, reading trend, reading structure, those are going to be the key principles that you can build off of. Once again, if you haven't done so already, make sure you watch the recordings from the entire Bridging the Gap workshop. It's 12 plus hours of free footage, but it's going to be gone by Monday, so make sure you do it right now. Just head over to www.tier1trading.com/free, and there's going to be a little thing that says register for the event. Once you do so, we'll shoot you the link so you can watch the recordings ASAP. And again, if you're late and for some reason watching this after the Monday deadline, there's always some type of free workshop or webinar that you can take advantage of as well. Lastly, remember to hit that share button. Share this video with your trading community. Remember to hit that subscribe button if you're not subscribed already. And until next time, plan your trade, trade your plan. I wish you guys a great weekend. Go Everton!